Good morning, everybody. So I think Dr. Batra asked a question. What's happened between last time and now? What's the big deal in fintech? So a little bit of a boot up question for all of you. So I'm going to ask this to the audience. What's the one big thing that's happened between same time last year and now? And in my head, there's only one answer. That's happening. In the world of technology, in the world of fintech. Yeah? Yeah, exactly. That's it. Right? Chat GPT came and every school child now knows what AI is. Gen AI is all over the place. Of course, we've been talking UI, using AI for a long time. But suddenly this is now common language, right? It's part of, I don't know, it must already be in the dictionary and stuff like that. But it's now part of a day-to-day. It's what everybody knows. Millions of people, even in India, have downloaded ChatGPT, used it. We make our speeches from it. I don't, but school kids use it to write their essays and whatever have you. Make art, write music, scripts, everything, right? So AI and Gen AI, specifically on the back of ChatGPT, is the biggest thing that's happened between then and now. But today's session is less about AI, and I see the theme, which is data. And actually, the link between data and AI is very simple, because AI is just taking data, taking analytics, using advanced data to create models, and then for the model to do the work, right? So that's very simplistically what AI is. So primarily, these two are very linked. So I think the theme for the day is very interesting. But I took a shot with a slightly different lens at this theme. So data is the enabler, technology is the enabler, but what does it do when we are looking at predictive possibilities, when we are looking at the ability to use data and AI for segmentation and personalization and all the cool heavy-duty things that it can do, for whom and for what are, I thought, important questions to answer. And we'll focus a little bit with that lens in the next few minutes here. And that's really the role that digital public infrastructure plays for all of us. And while I work in the land of payments, and payments has done its bit with 14 plus billion transactions on UPI, I think it's today a given. So we'll just talk about what's really happening in this broader landscape of public infrastructure, and then what this can do to open up the potential in the broader space of finance. So I don't have to really run these numbers through, because we know internet users and smartphone users and so on and so forth. But I thought these numbers, which are emerging in the last couple of years, right? And I see a lot of partners here from the AA space, for example. 70 million AA users. This was like a very nascent space just as of even 2 to 3 years back. DigiLocker users, 292 million. When I saw that number, I thought it was quite astounding, but such a simple service, right? Today you go and you can get your mark sheet and you can open up your Aadhaar and open up your driving license. And those of you who haven't tried the Digi Yatra, it's a must do. I just end up traveling and catching my flights thanks to Digi Yatra now. And that's the power of what we have with UDI and the whole identity infrastructure that we've created. And needless to say, with digital payments, while UPI is the poster child and everyone knows about it, I thought I'll also bring to highlight the Aadhaar payment system. Because the Aadhaar payment system also takes access to bank accounts for various kind of transactions to remote parts of the country. So if we say that there are about 350 million users on UPI, there's an equivalent number on Aadhaar payment systems as well. Now, there is an intersection between the two, but these are very large numbers here we're talking about. And the number of active users utilizing UPI leads to the kind of numbers here. And the digital payment index is actually a number that RBI publishes, which takes into consideration supply-side infrastructure, demand-side infrastructure, the actual availability, the quality of payments, and so on and so forth. So a number of parameters are taken, given certain weightage, and even this index has grown by a 4x quotient. Now, all of this leads to an environment where basically the story here is that from the possibility and potential and the scale of impact that digital infrastructure can make has been proven. So the country is ready, users are ready, and it is offering and adding value at a very significant level. So taking it from here, when we look at finance, we can look at this in sort of three buckets. So three buckets, one is the bucket of the whole banking system. And banking system is, of course, payments. But the very significant role that banking system plays is to be a source of saving money and actually borrowing money. So really the whole piece around access to credit. Now, when we look at our numbers on Aadhaar payment systems, data tells us that over the years, more users are keeping money in their account as opposed to the time when they used to come and cash out. So some time back, even if there was a benefit transfer, people would come, walk to their business correspondent point, and they would basically cash out. And money goes back under the mattress, gets used, so on and so forth. Now there is a confidence that this money is then retained in a bank account. So because the user can access this bank account and use that money, have access to this whenever they need to access it. And then what does it create from there? At a very simplistic level, when we say financial inclusion, it's not just that I have a bank account, right? Financial inclusion means that I should have the full power of what that bank account can give me. And what can it give me now? It should be able to give me some return, right? Some savings account return that I get. Because I'm now making my payments there, it should ideally giving me access to some credit when I need it. It should then give me the ability that I can actually take some insurance so that when I'm in need, when there is a circumstance, an emergency, a medical situation, or, somebody loses an earning member loses their life in the family, or there's an accident, etc., there is actually financial security there. And the third element comes to investments. So now that there is money in the account, when all of us have money in the account, we do something with it, right? We put it in an FD. We might put it in some sort of a mutual fund. We put it in some liquidity instrument. Some small part we keep away as a saving. And that saving is not just a saving, it's a saving that gives us some returns. So we are working and, some of us are salaried and some of us may be running our own businesses, but, we are putting our time to productive use and we are also able to put our money to productive use. But that's not true for a large section of the population. So this entire cycle of financial empowerment, of the ability to save money, ability to access credit, ability to insure, and ability to actually make some returns out of any saving is not available to most of our population. And that's really the crux of this, right? And there are some numbers here. So when we say access to funds, our retail bank credit outstanding is about 53 lakhs. However, our actual penetration, if you look at people with a credit card, about 35, 40 million, And then if you look at people with a full access to loan, we're talking of about maybe 90, 100 million. There could be some numbers added up by NBFC, some numbers added up by microfinance, but not very significant. And the underserved and unserved population tends to be extremely high. So while in developed markets, this number will be about 10%, developing markets also, are in the range of maybe 20, 25%. In India, this goes more than 60% plus of unserved and underserved when it comes to credit. And then you have access to security, and security is financial security, right? Which means any form of insurance, life insurance, general insurance. General insurance includes all your vehicle and medical and all that stuff. We're talking of premiums in the range of about 10 lakh crores. Of course, growing. All of these are growing phenomenally, and Dr. Batra said growth, right? So we are in the midst of growth, no doubt about it. But still, our premium penetration, and this is defined by IRDA as premium value by GDP, is only 4%. 4%. I mean, this is usually a very, very high double-digit number in most markets. Developed markets, of course, at 100. But even developing markets, tend to have a much higher percentage than what we see in the country. And then we have access to returns. So returns, of course, right from your, simple deposits, bank deposits. But I think if we look at a space which gives that right balance of risk and return, then really we are a good indicator, data indicator for us is the mutual fund industry. So where we look at that, we're looking at about an AUMs of 50 lakh crores. And even there, the number of investors in the country today is in the range of 40 million, 42 million. So if you really look at the whole lay of the land, a population of about 1 billion, right? Billion plus, of course, but I'm leaving babies and like older people out. So if you look at an active population, a productive population of 1 billion people, if you break it down and say, okay, households and so on and so forth, we're still talking 200, 250 million. But there's no number here that crosses 100. And that's both the opportunity and that's also the problem to solve. And when we say data on one side, this is what we can do. This is the potential we can unleash. And this is the possibility when it comes to the financial service sector of the growth that is available. So when we look at credit, for example, we spoke about the numbers here, the unserved and underserved numbers. And if you look at the life cycle of a credit product, right, because somebody has to know credit is available, how contextual can the credit be? Can it be available at the point of need? So there is a home upgradation that is needed, there is a medical emergency, there is a travel plan, there is a wedding, there is festive season for which some expenditure is needed, right? Can it be targeted, made digitally available, using data? Can this data be used in a manner that is additional to people with a credit score? Because people with a proper credit score are limited in nature. And the moment you don't have a starting point of a credit score, then, after that, the journey just stops there. So how can all these additional data points, along with a very contextual credit offering, have a mechanism where credit is actually available and accessible to all? Now, I think I had a conversation in the morning, and one of the partners here is also involved in collections. So when we speak to bankers, I think one thing I hear is, hey, but I can't really offer lower value of credit because how do I collect? And that's an important question to answer. Perhaps it's not just the traditional collection mechanisms, because there is a cost to collection, right? If it's very heavy duty, on the ground, physical. Microfinance sector, of course, informs us that actually speaking, even when we go up to the bottom of the pyramid, the collections are very good, but they are very engagement intensive. So people are required to actually meet them every month, create the subgroups that come together to create the liquidity pool. And that's really how that confidence in collection comes up. So using technology, using AI, using data to solve this problem, both sides of the cycle. How do we solve for additional mechanisms by which people's creditworthiness is provided? And then how to really look at how can we use data to be predictive, use data to proactively manage a collection cycle and bring down the cost on both sides, is what can really open up this entire opportunity. And of course, needless to say, each one of these is going to have a multiplier impact when it comes to GDP. So second thing is insurance. I think the playbook is the same, right? Just open up the value cycle and look at what the challenges are there. What is it that platformatization can provide? So I think both the National Health Authority, the insurance regulator, they're all in the midst of various initiatives to say how to make this whole process more accessible, simpler, and transparent. I think these three principles hold good in any platformization mechanism, which then opens up this whole public infrastructure that we're talking about. So insurance at the point of purpose. And you're seeing it today, right? So you're booking a travel ticket and you're offered an insurance, right? Add 20 rupees more and add on your insurance top up for your flight ticket, for example. So we're seeing the early signs of how this point of truth can be taken advantage of. So being able to target, being able to create that kind of awareness, being able to sachetize this as well in a way that insurance premiums don't have to be these large amounts that happen once a year, but can actually be paid up when somebody has the money to pay. It can be paid up at a frequency that is more in tune with somebody's earning cycle. Right? All of these mechanisms are available now. We just have to put the business model together and pull the infrastructure pieces in place. And similarly, when we are talking about having access to policies, managing these policies, making the whole claim process really simple, really transparent, having a common platform where it doesn't matter, who's the TPA, who's the insurer, which is the hospital, making this process completely seamless by bringing everybody on a same platform. These are all opportunities for common infrastructure to come in and kick in. Digital infrastructure powered by data, powered by access, simple APIs that do the job. And a lot of it is in play. I think some of it is in process, some of it is in play. I'm not going to touch upon so much of that. But again, this really is something that should bring many more people into the fray, into the gamut of security, financial security, but also create growth opportunities for the industry and the economy at large. And then we have, investments. Here again, I think it is about information more than anything else. Information for people to know how to plan their financial management. I will say even many of us learn this much later in life, right? If at all. And you can just imagine folks who don't have access to this kind of literacy. It seems logical. You're earning, 100 rupees, you put 10 rupees in the bank, and over time you take 2 rupees of that and you put it in, different kind of an instrument, and over time you take 1 rupee from that and you, put it maybe in a little riskier investment because it'll give you some extra returns. But it's not at all as logical for someone who hasn't gone through that cycle, and if somebody is not teaching you to do it. And that's that literacy, that awareness, that being able to try. And even in UPI, the biggest learning is people try because of word of mouth. Somebody has tried it, it's worked for them. It's very simple. And because it's very simple, very simple and transparent. Transparent creates trust. So I know what's happening. It's very visible to me. And because of that, I'm then also referring it to somebody else. So I think this entire cycle, this virtuous cycle has to be created. And again, platformatization has a big role that can be played here. It's already happening. I think we see that a number of the apps, for example, that are UPI apps have actually expanded their space, right? You see them in insurance, you see them in investments, you see the likes of, in fact, if you look at the securities brokers, the top 3 are no longer, the traditional companies. They are actually new age organizations. You have the likes of Zerodha, Grow, and so on and so forth. So the space is changing very dramatically as we see it, as we speak in the last few years itself. But there is still so much more opportunity and play there. I also believe that there will be strong vertical players who will emerge, who will create these business models and really take advantage of the opening up of this common infrastructure space. Yeah, so I think those are the 3 elements, the digital infrastructure we have today, over and above UPI and Aadhaar. So there's identity, there's payments, there is DigiLocker. All these pieces exist. There is, of course, now the AA infrastructure, there is ONDC. There is in parallel to this, there is the whole health stack, the education stack. These are all getting created in process. But also, I will certainly say that there is a lot of work going on across the financial sector to really open up this power and possibility for the financial future that can look very different. So I'll wrap up with that. So thank you very much. Thank you for inviting me here, Dr. Batra, Devika. Wonderful. Look forward to connecting with some of you later on. Bye-bye.